Welcome to today's SEEtwothelos Thoughts on the Market. Today is September 4th, 2023, and the stats are out for this month, and let's jump right into it. So we're going to start with the MLS stats. So these are, this is the sales price here for our market. This is in the Tucson area, of course. So we hit a peak in June of 2022 of 355,000. This is median sales price. And so right now, believe it or not, we are at 355. We are at exactly the same as we were at an all-time high, but the way the market feels is you would not think that that's the case. It feels like we're down here. So that's interesting to watch. Days on market. So we had it looked like we were going to climb. We were saying that that we would be worried about days on market once it got to some of these levels here, the 100-day levels. We got up to 31 days on the market, and now we're trending downward since February of 2023. So we're trending downward towards less days on the market again. New listings. We wanted to see a spike in new listings so that we could see the market kind of get back to its normality, but it looks like we didn't really get the amount of listings that we needed to get here. So that means that this is just going to, create a hotter market when the interest rates go down, which is, I know that a lot of people want interest rates to go down, but the harsh reality of it is that it's not actually great for the real estate market for there to be a ton of offers on one property. You want balance in the real estate market, and that's better for everybody because then the market tends to be more fair that way. So month supply, so we saw peak month supply when the market, when prices go down, you see inventory be above 6 months. Now we saw inventory go from 1 all the way up to 2.5, which is crazy because that is a 200% gain. But when you look at it in retrospect, so what you saw in the headlines is inventory jumps by 200%, but the reality is we went from 1 month of inventory to 2.2 months of inventory. And remember that a normal market is 6 months of inventory. So that's something to note there. Pending sales, this is going to indicate what's about to happen next. So what are we going to see in closed sales? So you saw pending sales start to climb again, which usually this doesn't happen around this time. Usually around July and August, we start seeing it go down. So it's very interesting again that we're seeing a jump here. And this is also interesting considering the fact that there's higher interest rates. So that's very odd. To me, it signals that the market can get very hot very quickly, which is scary to think about. So if you're looking to buy right now, that would be a good reason to tolerate the higher interest rates, is because everything in the data is showing that that we're not going to loosen, that in fact we're going to tighten, as far as being able to buy a house. So closed sales, again, we're down, but we see pending sales go up. So that means that the next month we're probably going to see sales pop up again. So we'll see how that goes. All right, so the next part that we're going to jump into is going to be interest rates. So these are, this is not necessarily interest rates, but what this is the 10-year treasury bonds, which the interest rates usually are about 300 basis points. So simple explanation of basis points. 100 basis points is only 1%. So it's just a smart way of saying 1%. So this is 3 percentages higher. So the interest rate right now, mortgage interest rates are about 3 percentages higher. So they're about 7.1 as of today. The last time they did reach all-time high here, just barely. And so the last time that we saw all-time highs, just barely, was back in November of 2007. You can see it on the bottom left corner there. So November of 2007 was when interest rates were that high. The only difference is during that time of 2007, inventory was way, way high. So now we have a difference. We have low inventory with that same amount of interest rate. So here you saw prices go down, which a lot of people think prices are going to go down because interest rates are high, because they were back here. But the difference is the inventory was super high back then, right? And so we'll continue to look at that. So anyway, interest rates are at all-time high. What's more likely to happen is that this happens again, that we do this again, we drop again. And if we drop again, then that means that pricing will have to go up because that means that more buyers will enter the market. And so that's kind of what we're seeing, although everybody's saying this is not the time to buy because of interest rates. the time to buy is actually when interest rates are high, because it actually gives you an opportunity for your price to climb, because interest rates will go down. So anyway, if you have any more questions about that, feel free to call us and we can go into more depth on that subject. So the last thing I wanted to talk about, or the last couple of things, is long-term versus short-term. So whenever you look at, if you look at short-term, so this right here is from 2010 to 2023. But if you just look at, instead of looking at that timeline, if you look at 1 year, this is what you see. So you would think that the market is not, is actually going to go down, because we saw it go down here, right? And so this looks bad, but all you need to do is zoom out. And when you zoom out, you notice that it's not actually that bad. It's actually more likely to continue this trend. So short-term versus long-term, make sure that anytime that you invest in anything, you're always looking at things long-term. And then the last thing is, we on Twitter, we're on, While Real Estate is on X. I guess it's not Twitter anymore, it's X. But I follow nothing but real estate people, and I wanted to show something. So here, this guy, Lance Lambert, great person to follow actually. He talks a lot about real estate stats. So he's talking about Austin's inventory. So Austin's inventory right now is as high as it ever has. It's been for a long time. And my point here is that not all markets are the same. Although this is true, Austin has crazy inventory. We're looking at the stats right now in inventory here in Arizona in your market, and this is the important thing, and we're not seeing that this is the same as 2015, the way that Austin is seeing, right? And so we want to keep that in mind. All markets are different. And of course, Tucson is a different market. Another thing to keep in mind, and a lot of buzz right now that's happening, is about Airbnbs. They're saying that now that Airbnbs are going down, that there's going to be a lot of houses on the market, and that is true. It's true, but it all depends on the market. So in a market like Tucson, Airbnbs weren't super duper hot like they were in Scottsdale. We didn't have the Super Bowl. We didn't have a lot of things that made people want to buy Airbnbs. And so in Tucson, we're not going to be affected by this Airbnb issue, because we, quite frankly, aren't that good of an Airbnb market. And so that's just my thoughts on that. If you guys have anything else to add or would like me to talk about anything else, please leave a comment below. Definitely like, and I'll see you on the first Monday of next month for the SEEtwothelos Thoughts on the Market.